Good morning. It's Tuesday. Here we go again. The stock market's all over the place. Initially, they collapsed on the open yesterday in the US and in Europe, and then saw a phenomenal recovery to close higher on the day. Not sure what that actually means as far as banking systems are concerned. The focus now is, of course, on the FOMC. What are they going to do? 2 weeks ago, they were certain to hike 50 basis points. Now, the general consensus is that they will hike 25 basis points, probably because they have to be seen to continuing the fight against inflation. Otherwise, they're going to lose all credibility. They hardly have any credibility left anyway after the banking crisis and losing control of inflation. Don't forget, interest rates are still way below the rate of inflation, which isn't ideal if you're trying to fight inflation. But now they seem to be backed into a corner whereby they've let the banking system go to pot and they can't raise interest rates, or there will be an all-out banking collapse. It's just an insane situation. Goldman's yesterday said that they expect the Fed to pause at this meeting on Wednesday. Now, if they pause, of course, normally that would have been seen by stock markets as extremely bullish, adding liquidity to the market and not raising rates when they probably should do. But I think now, if they don't raise rates, the market might panic. What does the Fed know that we don't know? What does Goldman's know that we don't know? If anyone's going to know what's going on, if anyone's in touch with the Fed and the Treasury, it's going to be Goldman Sachs, isn't it? I haven't got a clue what's going on. I'm getting my news from Twitter. But it's quite frightening that Goldman's say that the Fed should pause or will pause. It will be really interesting to see what the reaction is if the Fed do not raise rates. Indeed, I wonder when the markets will get back to focusing on the economy. Okay, let's have a look at some charts. WTI crude has been testing my support level for quite a few days now. And yesterday we did probe lower, but we did hold on to the support level and we saw a very good recovery. As you can see, we have a bullish hammer candle on the daily chart with a nice little green body, long lower wick. So I'm feeling quite hopeful that finally WTI crude can take off and start heading higher, see that recovery that I've been predicting for a few days. Oversold on the daily chart. A nice 300 tick recovery from yesterday's low already in oil as we test what should be the first support level on the short-term chart, at least at the 23.6% fib and 100-hour moving average around the $68.50 area. Would I be trying a short there? Not really, unless I was a scalper and I was prepared to jump out of a short and reverse into a long position quite quickly. You've got to be flexible. If we do start breaking above $69, that's going to be pretty positive for oil. And it shouldn't really take much for oil to then jump up to $70.50 to $71, and maybe even today. Gold has already had a phenomenal run from something like $18.11. I think it was $1,811 just before the banking crisis, and it's now rocketed up to $2,009, a $200 jump or 10%. Quite incredible. Really was the go-to safe haven, wasn't it, over the banking crisis, or the start of the banking crisis. It certainly isn't over yet. Now, we do have a potential head and shoulders pattern on the hourly chart yet to be confirmed. We would need a break below the first support level, which is at around 1964, 1960 today. Break below there. If it happens, it may not. We may just range sideways for a few days and consolidate the recent gains. But if we do start breaking below sort of 1958, 1957, that signals that the head and shoulders pattern has completed and we could fall as far as 1935, 1930. Now, the silver pattern is not as bullish as it should be, considering we've just had a strong recovery. We are testing the 50 period moving average on the 4-hour chart. But look, we have that rising wedge pattern that's not actually very bullish. Obviously, we have to break below the lower trend line before that turns into a sell signal. But this rising pattern isn't the most bullish thing that you would want to see for silver. So just be careful of that. Going back to the old interest rate expectations for the Federal Reserve, the FOMC, financial markets are indicating that interest rates could be cut as soon as June, a cutting cycle starting as soon as June, with expectations that banks will now tighten up lending procedures. So there'll be a lot less credit around and therefore the Federal Reserve may have to cut interest rates. Interesting. With inflation at 6%, it's bizarre. So the dollar has been sinking on that lower interest rate outlook. Interesting when the ECB are still talking tough on inflation, still talking about a big inflation fight ahead of them and higher rates in the Eurozone. So we've got quite a big euro interest rate differential between the ECB and the FOMC, which probably will lead to further gains in the euro versus the US dollar. We have seen the euro creeping higher against the US dollar recently for that exact reason, I would imagine. US dollar yen, we've got some very clear sell levels for any bounce, assuming that the dollar weakness will continue. We're already in a very clear bear trend, as you can see, for the US dollar versus the Japanese yen, with resistance at around the 131.60 area today and strong resistance around the 132.20 to 132.30 area should we bounce that far. Okay, that's it for me for today. We'll wait and see what happens from the FOMC on Wednesday. Good luck if you are trading today.